While the entire world was worried about inflation, recession, interest rate, war, and many other things, Indian equity markets have smartly recovered back all their losses year to date. Yes, if you didn't know, you should know. Nifty is as flat as it can get as we speak today. It has recovered all the losses that it has seen this calendar year. Even mid caps and small caps have smartly recovered, and definitely mid caps have recovered far better than small cap. And see, if your portfolio is far more down than the benchmark, which is Nifty or NSE mid cap or BSE small cap, then there is something definitely wrong in your portfolio. If it has not recovered all that it had lost, it means there should be something wrong in the sector or fundamentals or the fund manager itself of that particular mutual fund or the stock. Do watch out for the reasons why it is so badly down or not recovered even after the substantial rally that we have seen in the last 1 month or so. Now, you may think that this rally is short-lived. You may also be worried saying, will this rally sustain from here? Will it come down? Will it stay as flat as it is right now? Or what is ahead for Indian equity markets? In this video, I try to answer three primary questions that could be on your mind or should ideally be on your mind with your current portfolios. Should you sell right now? Should you actually hold on to the current portfolio, or should you buy at these higher levels? Let me try and answer these questions in this video. Watch till the end. Let me first try and answer the question of all short-term investors. Should you use this rally to exit out of their current holdings? Let me start with an analogy. If you're an equity investor investing a lot of your sums in equity portfolio, it is like bringing up your kid. It is like seeing your kids growing. The kids will fall sick. When they run, they will fall down, break something or the other. They will have some issues with their parents sometime or the other. They will have mental, physical, lots of issues in total, but at the end of the day, they will end up growing as a beautiful girl or a very handsome kid, isn't it? Your equity portfolio is exactly like that. It will have hiccups. It'll go down, it'll go up, it'll suddenly fall. And then at the end of the day, when you look at in the long run, you would have built a beautiful portfolio that would give you excellent returns. But if you're a short-term investor who keeps thinking, should I exit, buy low, sell high, nothing is going to happen. You should focus on wealth creation and not look at timing in and out of the markets. It's a different thing if you want to reduce the risk in your portfolio. You want to exit equity completely because of its risk nature. But if you're someone who's investing in equity for long, you should not take this opportunity to move out of your good asset. Having said that, if the asset is bad, whether it is today, yesterday, or tomorrow, any time is to move out of that particular asset, stock, or mutual fund. Do that selling today if you're in a bad asset. Otherwise, just keep holding those good assets. The second most important question that you may have in your mind after this substantial equity market rally is, should I hold on to my existing portfolio? Of course you should. After all, you're there in it for long term. Yes, psychologically the mind says after the fall it has recovered back. Boss, if you have gone through the fall and stayed put, it means you have the right mindset to see the portfolio grow too. It doesn't mean that it will not fall from here. It can. But the very fact that you didn't do anything when the market fell 18% from the top and now it has come back and given all the returns back to you, I think your mindset is correct for your portfolio to be held and not sold. In fact, you should do one more thing with your money that is lying idle in the bank account. I will cover that up in my next section. I believe in something called just keep buying. It doesn't matter whether the market is at all-time high, all-time low, stagnated, keeps falling, keeps going a little up and down. You know why? Because I strongly believe and I'm very convinced in the India's growth story. Very similarly, in the last few weeks, few months, if you have not taken any action on that money that you have saved and kept aside in a savings account or FD, which is not even beating inflation, you should immediately take this opportunity to invest that particular money into equity without any further delay. Now, you may again ask me a question saying, okay, I'm convinced. Should I put the money in one shot, which is lump sum? Should I stagger it over 3 weeks, 4 weeks, 5 weeks? Psychologically, it is always good to stagger your money because आज अगर आप पैसे डालते हो, if you invest the money today and if the market again starts tanking, it's not a great feeling. Psychologically, it is good to stagger your money, but honestly, with all the data that I have, I know for a fact that in a growing market, if you stagger your investments, you are going to pay a higher cost. So if you have the money which you have saved already in the bank account, and if you are not worried about the short-term moves, which I think you don't have to worry about, just keep buying. Put all that money in one single shot. I'll just give you some data. Foreign portfolio investors have been selling Indian equity markets in search of moving their US dollar to US for safety purpose because the interest rates there are going up, because of which Indian equity markets kept going down and down and down. Thanks to all domestic investors like you and me, we didn't fall as badly as what S&P 500 or Nasdaq did. But the good news is FPIs are back. If you look at the last month data, which is July month data, you would see that FPIs have seen positive inflows after seeing the last positive inflow in September 2021, which is great news. There are two reasons for it. There is no other better story than India, believe me. Second, USD is already touched 80, which I think is not the right price. USD can ideally be placed around 78 or so. So if I invest at $80 today, and if I withdraw at $78, and in equity markets also I make money, I would be called one of the best fund managers of this recent decade, isn't it? It's very simple. You put your money where the opportunity is, and fortunately, India is a land of opportunity, and take this opportunity to buy into equities today. I really hope you like my video. If you have any suggestions, please do share it with me. Good luck. Happy investing.